Hi, welcome. It's Mary Ellen McGonigal here, Senior Managing Director of Equities at Simpler Trading. This is your Friday Weekly Edge show for June 3rd, 2022. Today, we're going to take a look at the broader markets. We had another bumpy ride for the week, so you're going to want to see where we closed out the week with an eye toward what to be on the lookout for going forward. We're also going to take a look at some of the impactful news that drove price action this week, highly relevant as it relates to what to anticipate in the near future. Also, viewer question of the week, and it's all about uncovering pockets of strength in an otherwise difficult market environment. I'll review those stocks and share with you why they are outperforming. So let's take a look at some of the economic data that drove price action this week. First up, we did have news earlier in the week where Purchasing Managers Index jumped in May, and then also the manufacturing index in the U.S. was stronger in May, while factory orders were on the rise. This shows not considerable strength, but certainly something in the way of growth in the U.S. economy, and that is not what the markets want to see at this juncture, particularly as the Federal Reserve is looking to quell growth in the way of rising interest rates. So these data points did drive growth stocks down earlier in the week. However, on Thursday, ADP reported their private sector job growth report for May, and there was a drop in job growth, and that actually pushed the markets quite a bit higher on Thursday, particularly growth stocks. Unfortunately, today on Friday, we did get numbers relating to broader U.S. job growth, came in stronger than expected, and the markets sold off. All of this is really quite telling as it relates to investors' high sensitivity to these data points. We anticipate that to continue certainly over the near future until we get clear-cut signals that inflation has peaked and growth is not on the uptick. Next week, we do get some important data. The core CPI, that's Consumer Price Index, a highly relevant inflation data point, will come later in the week. Also, consumer sentiment will be reported, and then weekly job claims. So be on the lookout for that going into next week. From here, let's take a look at the broader markets, and we're looking at a daily price chart of the S&P 500. Want to take a look here. We can see last week we had a holiday shortened week. So these 4 bars represent the price action. Those negative bars are the dates that the higher than expected economic data was released. And then this is that rally on Thursday in response to potentially reduced job growth. As it relates to the technical status, we can see that the S&P 500 remains above this 10 and 21-day simple moving average, somewhat constructive, certainly. Our outside momentum indicators, the RSI, remains up here in positive territory, as do the stochastics, faster moving momentum up here above that 50 and trending potentially higher. So super near term, there is an opportunity for the broader markets to rebound and continue to trade a bit higher from here. That next area of upside resistance for the S&P 500 is at about this 42.49 level. That's that 50-day simple moving average. And if we are able to break back above that, certainly we would be in better standing. And again, your next area of upside support here at that 45.50. This is your 200-day simple moving average. So from here, let's take a look at the activity behind and beneath the broader markets. We're looking at a 2-month daily price chart view of the 11 sectors in the S&P 500. I've gone ahead and added this RSI. That's a relative strength indicator. I want to see where there may be relative outperformance compared not only to the broader markets, but for these sectors compared to their peers. So What I've done is then again sorted it so that the strength is presented up here in the upper quartile, and then your weaker sectors down here in the lower right portion. So let's take a quick look. We can see energy up here. Yet again, it was up for the week. The broader markets were down 1.3%, energy up 1.1%. And I'll share with you where and why as we move forward, but it's certainly remaining in a very confirmed uptrend. Here's a view of that daily chart of XLE, that energy sector. From here, we can see defensive utility stocks up here at the forefront. They were down in line with the broader markets. This strength is a carryover from the last week's move that was made into these energy utility stocks. Materials, we can see that they are attempting to reverse this downtrend. The materials sector was able to close the week above this 50-day simple moving average, and however, it was down a little less than 1% for the week. A lot of price bouncing around there. We'll share where and why as we move forward. But from here, we do want to pay attention to some of these weaker areas. And first up is consumer staples. We had this big break. This occurred after Walmart and Target reported not only weak numbers, but guided lower going forward because of high inflation. Investors had a sense that negativity as it relates to future growth could easily carry over to consumer staples as it relates to spending on food and other products may deteriorate. So we can see the staples sector is in the throes of attempting to reverse this break, but by and large, it has not been taking place. They're still in downtrends, certainly among the major consumer staple stocks. Other areas that we can take a look at here as it relates to strength relative to weakness. We'll just take a look here quickly at the industrial sector, still in negative territory, has not broken above this key area of resistance, but there are pockets of strength in the industrial sector as it relates to transportation stocks, heavy construction names. So we'll get into some of that as we move forward as well. So let's go ahead and drill down even further beyond those sectors. I have some sub-industry groupings and areas that are really relevant to price action in the broader markets. We're looking again at a 2-month daily price chart view. First up here, we can see that Brent crude oil, it's now up here at $117 per barrel, very elevated. And this in turn is buoying energy stocks, which of course many of the producers do have and experience high earnings growth because of this higher cost per barrel of oil. So we are seeing those energy stocks continue to remain in an uptrend. Let's move forward. Take a look at the yield on the 10-year Treasury, and this has been relevant certainly to certain areas of the market, primarily growth stocks. When we see these the yield on that 10-year rising, it is negative for growth stocks because the implied growth going forward is coming in and expected to be at a reduced level because of high rates. So we can see interest rates did in fact increase this week, all about that data that's pointing to growth in the U.S. economy. Again, not good for growth stocks. Let's move forward, take a look at some of these other highly impactful areas. First up, we'll look at the U.S. dollar. U.S. dollar really was on a tear here into mid-May, and the impact here was among primarily commodity stocks that as the dollar trades higher, commodity stocks go lower. So this particular period was strong for that basic materials area, but we are seeing a bit of a leveling off and a potential uptick in that US dollar again. Another area that we can take a close look at here are semiconductor stocks, and they're in the throes of attempting to reverse their downtrend. A couple of names came out with very strong numbers. They guided higher going forward. However, the group did end the week lower than the S&P 500 and below this downward trending 50-day simple moving average, so not constructive for that overall sub-industry grouping. So from here, I did mention that we were going to review some stocks that are bucking the weakness that is taking place elsewhere in the broader markets. First up, we're going to take a look at a stock that had a base breakout today, and this is also in the industrial sector. This is Northrop Grumman. NOC is the ticker symbol, and the stock had a significant rally today. They've been winning contracts. There were several that were listed this week as it relates to defense-related contracts, and we can see that the stock is actually very close to breaking out. We're going to need to see it trade just a bit higher. However, we do have some nice positive momentum indicators here with that RSI up there in positive territory. And then also we have the MACD had that nice black line up through the red and trending higher. So let's take a look at another stock that is also outperforming the markets, and then I will share with you the characteristics that are driving investors to this particular stock as well as other stocks in this industry group. This is IBM, and I'm going to share with you a full quote view so we can really pinpoint the characteristics that are driving IBM to a new near-term high in price. Up here, we can take a look and see that the company offers a very healthy 4.6% yield. The stock is trading at about 20 times trailing four-quarter earnings. The point here is that lower multiple, or certainly multiples in line with the market, and that high dividend yield are very attractive during this period of high inflation. We also can see that the stock is in a nice uptrend. The company reported earnings about a week and a half ago, and not only were the numbers strong, I'm adding an additional moving average here, but also management guided higher going forward. So we had that nice base breakout this week, pretty decent volume. I've added this blue 5-day simple moving average that can be really helpful as far as guiding your potential entry point. If you're inclined to get involved with this market, that would be an ideal buy point. We can see the RSI in positive territory trending higher, as well as this nice MACD crossover that's taking place. From here, I have one last name that I can share with you that is looking compelling, certainly compared to the broader markets. The ticker symbol is PWR. This is Quanta Services, a heavy construction company, and one of their main focuses is helping with oil and gas pipelines. That's certainly a growth area given the move and the increased pricing power of these energy companies. Today, the stock broke back above its 50-day moving average. Actually, it did so yesterday and had a nice continuation rally today. That RSI trending upward in positive territory. We have this nice black line up through the red. That's an early signal that this downtrend has reversed. Now, with this MACD moving average convergence divergence in positive territory, that lends further upside here for the stock. I'm going to go ahead and add that 5-day simple moving average, which actually is already there. It is this blue line. You can simply see the value for that 5-day over here, and it is at 123.2. Any action as far as the price moving back close to that level would be an ideal buy point for Quanta Services. I'm going to leave it at that. Everyone have a great rest of your weekend, and I look forward to seeing you here next week. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.